The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Since we're on the subject of trading places, it was on again last night. I don't know if you folks that have watched this many times know this, but when Dan Aykroyd comes into the Duke and Duke building, which is the Wells Fargo building in Philadelphia, 100 South Broad Street, he gives his coat to a gentleman, and he says, "Thank you." That gentleman is George Folsey. He's the man who put up the money for trading places. And how do I know that? George Folsey happened to live up on San Remo Drive, where my very good friend Jay Cross lived, and right next door to Jay was Sylvester Stallone. And anyway, that's neither here nor there, so we'll keep an eye on it. Folks, we've got an interesting alarm going off right now in the old GOLD market. We are now making a 61% retracement of this whole move down, folks. This is beginning to look like more and more that this gold doesn't want to give up. So we need to pay pretty close attention to the gold today. If we get above the 1270 level with that old high at 1275, we could really get moving. So just watch it really closely here at this 1264 level, because that is the 61% retracement back. It had every opportunity, to fall out of bed after it hit that 1248 yesterday, and of course it did not. It turned around and has been rallying. Guess what? $17 off the bottom. So pay particular attention to it here, because it will be a very, very important day if we get above that 1270 level in gold today. Now, silver looks totally different, as does platinum, but right now that's what we're watching in the gold market. So just keep an eye on it, that it does look very, very interesting at this level. Right now we're up about $10 in the gold, and we're sitting right at the fib number of the whole thing down. So, and it's at a half of a harmonic number at 17. Whether this stops it or not, I don't know. It's just a key number, that we're keeping an eye on, that's for sure. Okay, the next thing that someone asked me was about the trading places. What was my most memorable thing about trading places? I mean, I saw the movie so many times, but probably the most memorable thing was Jay really loved the movie, just like I did. We saw it together in 1983. He had been to Chicago to visit me from California, and after a couple years, must have been about 1986 or 87, the desk, the partner's desk that was up in the offices there of Duke and Duke. This is where Eddie Murphy pulled out those drugs, that he planted. That partner's desk came up for sale for $2,000, and Jay bought it, and it actually was worth a lot more than that. And anyway, he ended up giving it to his son later on, but that was one of my favorite things. It was really a lot of fun. If you're ever in Philly, you got to go to that Wells Fargo Bank, 100 South Broad Street, and then go over to Washington Park, and you'll see where Eddie Murphy was skating across the thing, where the two policemen picked him up, and then I can see, miracle. Oh, what a great movie. And then you can also go over off of Rittenhour Square. You can see where the mansion was that he lived in. So it's pretty cool. Plus they have the bar there and stuff. So it's really a fun thing to look out. Okay, let's get back to the markets. First thing we're going to look at here is the DAX index. As you can see, we're still in the process of possibly fulfilling this Gartley pattern down here, about another 170 points in the DAX, so that would be equivalent to our number in the E-mini that we were looking at. We'll put this up here, and we'll take a look at this, because this is something we were watching yesterday. We posted this into the room. It actually did relatively what it's supposed to do. Now, if we get above this 23.63 level, which was our high yesterday, that tells us that we're most probably getting ready, to make another leg up, maybe all the way up to 23.85. But this is still in a downtrend since March 1st. So, even though it hasn't gone down very much, it is certainly still in that process of making what we think could possibly be a major top. There's another market that needs to be watched very, very closely here, folks, and that is, we'll just put this up here, is the euro. We'll put this up so you can take a look at it here. You'll see here we've been watching this one for quite some time. We had that 61% and 78% retracements coming in there at the 105.80. The low was 105.69. If you bought that at the 105.80 level, put your stop at break even, folks. And the reason for that is that you don't want to take any risk at this particular point in time, because this, on a longer term basis, this Forex pair is still in a major downtrend, as we've seen, but it could be turning big time. And if we get above the 106.40, that would tell us that's most probably what is going to happen, would be my guess. So that's another one that looks, pretty interesting at these levels. So watch it very, very closely, and that's the main thing to keep an eye on. Another question that someone asked me about yesterday's show was the fact that I had posted some things in the newsletter about the death year that W.D. Gand had talked about. And that comes from my good friend Jim Flanagan from GAN Educators. We're going to have Jim on as a guest here very, very shortly. And basically, I'll post this to show you what it was. But he's just showing you the years where the years that end in 7, how bearish they've been at certain times. These were after major bull markets. You can see 1917, 1937. And then, of course, 1957, that was when we had the Nifty 50. And then August the 25th, 1987 is when the market made its high with harmonic convergence, going down into the big crash, which was down about 36%. And that's what the year in 7. And that, folks, you've only got one sample every 10 years. So that's really is something that might be statistically a little bit hard to prove, because if you go over 100 years, you're not going to have very many samples. You're going to have 10 samples, and you really need 100 samples to make it statistically important, in my opinion, and also by statistics too. Let's take a quick look here at the U.S. dollar as we come into the break. We're due for, this is interesting because if the dollar doesn't go screaming up from here, this means that the euro could be turning, folks, and you have to pay pretty close attention to that. That could be related to the interest rates also. So we'll take a look and we'll see, how much this is going to be. But we're right at a major inflection point here at this 101 level in the U.S. dollar today. So we need to pay really particular attention to it. It's a very important spot. So 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and I wanted to just give me 1 second here. I wanted to bring the chart of silver up to show you what it's doing. Given to what gold is doing. Gold has made the 61% retracement of this whole move that we've had. And on the silver, we'll put this up right now so you can take a look at it. We just recently, in the last few minutes, we went up and made the 50% retracement of the silver market. So silver, again, is still lagging badly, and platinum is it's lagging really badly. So we could break out from here. There's no question about it. That number that we were looking at down there at 1770 in silver was certainly a very, very important number, and that's the main thing to see what is looking at what's going on. Yes, in the room today, they're chatting a little bit. By the way, we have a full moon today, April the 11th. And so you want to pay particular attention. I don't know if the full moon was responsible for what happened at United Airlines in Chicago yesterday, but when the CEO, Mr. Moniz, or whatever his name is, the CEO for United came out and defended his employees, saying it was the passenger that was unruly. I watched that video, and I didn't see all of it, but boys and girls, I mean, that was not very good public relations. I mean, give me a break. I mean, that I just couldn't believe that they would treat a passenger like that. That's going to be very interesting to see how this comes out. By the way, I don't know if you folks know this or not, but the folks, the airlines have tremendous flexibility when the person gets on the plane. I mean, you give up many of your constitutional rights when you're getting on a plane. I was watching a segment last night on the news from an international attorney, and he was telling the folks that you do give up a lot of your rights, but I don't think you have the right to be dragged out like that. That doesn't make a whole lot of sense. But I think they're going to give the dude a pretty nice settlement, because that was very, very embarrassing. And no matter what it was, yeah, that's right. When you're asked to leave, I guess you should leave, Gator. I have to agree with you on that. And, they were offering $800, and you had to stay over. They would have probably given you a room, too. But $800 is not a chump change, but they could have easily made it $2,000, and I'm sure at $2,000 they would have got someone to get off the plane. They needed to get that crew down to Louisville, and by the way, the guy on the news from CNN yesterday said it was nothing more than a 4-hour drive from Chicago to Louisville. Well, it was a 4-hour drive if you've got Emerson Fittipaldi driving one of his Formula One cars, because I lived in Terre Haute, Indiana, and it was 2.5 hours from Terre Haute to Louisville, and I was 4 hours from Chicago, so that's 6.5 hours. So there's no way that's a 4-hour drive. Yeah, you could use A.J. Foyt too, but it doesn't make any difference. You can't do it like that. Not only that, but you've got the time to get to the rent-a-car place and do the other stuff, plus all the other things. And anyway, that's neither here nor there. Okay, let's look at a couple other things that we were watching yesterday. This trade is still possibly going. It could be ready to work, folks. And just give me 1 second here, and we'll put it up here to take a look at it. This is the one. If you'll give me a second here, this is the Canadian dollar. We're down into this same area again where we were in the Canadian dollar. We're down at this 133 and change level. That should be a good bottom. Whether it's going to be a bottom or not, we don't know for sure. But these are the probabilities that you have to work through as you're following these particular things that we look at. Now, we've also mentioned the fact that we have a possible bearish scenario in these notes and bonds. That still looks apparent to me, but if we get above this 153 level in the Treasury bonds, this would tell us that maybe we're not going to make it. The high that we made yesterday at that 152.10 level was, and we're trading at that same level right now. Actually, the high yesterday was 152.12. We're trading at 152.09. That was a 61% retracement. And if we get to 152.22, that's the 78% retracement. And there's also, if you'll look at your charts on an hourly basis, you'll see a very nice ABCD pattern over the last day and a half that also measures to 152.22. So that's another one that looks pretty interesting. So that's something that you might want to keep in mind as we look at some of these things here. But I think the real key here that we're watching is in the bonds and also in the currencies. I don't think the stocks are doing much. I mean, we've been in a 4-point trading range for well over 12 hours now in the E-mini S&P, which in itself is unusual. But we could break out of that range without too much trouble. Also, another market that is beginning to look even more bearish, of course, is the Japanese yen versus the dollar. We're ready to break below that 110 level again, as we've said many times. So if we close below that 110 level, we're going to be looking at probably 108 to 107 in the dollar yen, which is a considerable amount. We've had very little rallies in this market, and it's going to be quite interesting to see what is going on. Now, the gold is we're a couple dollars higher than the 61% retracement. That means very high probability we're going to get up here to the 78% retracement, which is $2.50 higher at 1268, and above 1268 it's going to get really interesting, because if we do that, then you'll be watching something that could be very, very exciting. But we've got some currencies that are really on the move this morning: the Canadian dollar, the euro, and also the Japanese yen. The British pound's not doing very much, but the rest of them are acting pretty bullish if you look at it from that point of view. And we could easily move a lot higher in the euro, i.e. lower in the U.S. dollar. And we've been up 8 days in a row in the U.S. dollar, so that in itself would not be too unusual. Folks, I'll tell you, this business can be so darn frustrating, because, we were looking at that area in the gold of a 1275, and we dropped almost $30. We dropped $28 in the gold. And when you would think they would follow through, but it certainly hasn't. All we've done now is rally another $20 to the upside. We're exactly $17 higher now than we were just the other day. So if this thing breaks out to the upside, it could be, something very, 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 very important. Hold on one second. I have to do something here. Let me see, 152.22. That's pretty much what we're watching. Anyway, all right. That's had to answer someone. Just give me a second, please. I have to change one order, and I'll be right there. Okay, let's move on here, and we will. I've got to change an order again. Give me 1 second, please. I have to do this, folks. Otherwise, hold on one thing. Just a second. I've got to check the. Hold on. 50.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I want to take a look at gold here for several different reasons. This is the daily chart going back for the last year and a half. And just the last year. Sorry about that. But the 61% retracement of this whole move comes in at 1279. Now, we hit 1275 on Friday, and then we had that shooting star pattern. But folks, what the market has done now, getting back to this 1265 level, it's negated this shooting star pattern, because you shouldn't get back into the heavy body of that star if that's the case. So the next thing that I wanted to do is to see what could possibly be doing this. And what I'll do here is to share with you my observation, whether it means a whole lot or not, but it's just a pattern, as most things are. We will take a look at it. But if we look at this gold here on a 30-minute here, you'll see that we have a potential 3 drive to a top pattern at the 1279 level, 1280, which is the exact Fibonacci level on the weekly chart. Remember, the silver is trading at about 1807 right now, and its old high was 1850, so it's $2,500 under its price, 50 cents. So that's quite a bit of negative divergence. So it's going to be interesting to see if we clear this 1268 level in the gold market, because it's got some very really important resistance at that point. But what I try to do is when you get into a pattern and it doesn't work, and a lot of them don't, as you're aware, you want to look to see what the next level is, because you don't want to sit there and be short gold from 1263 all the way to 1279. That's ridiculous. You want to keep your risks relatively manageable. That's the main thing that you really want to do. Now, you don't always get that chance sometimes, but usually you'll get a pretty good chance of doing it. So we did take out yesterday's low in the S&P, but in fact, we haven't really done very much there. So my assumption is that this is probably going to be another day where we either chop around or maybe have a pretty good reversal. But the fact we got down to 2347 and there were no stops there at all, we immediately jumped above that. That's another thing, folks. Don't put your stops at those old lows. I mean, gosh, give me a break. And believe me, they're not out looking for those stops. People just know that that's where people put their stops, at the old lows or old high. Put your stop at the 1.27 of that number. The difference is about $100, and that'll prevent a whole lot of heartache. I remember when I first started using the 127 number back in 1987, I was speaking in Switzerland, and I had gotten stopped out of 4 things on one afternoon, which was early in the morning in the U.S., and it was right at the exact high tick, and that's when I found the 1.27 ratio. Later on in the next year, I found out all these ratios from my good friend Bryce Gilmore, who really explained to me how the markets actually work. So those are just some of the things to pay close attention to, because we're at a point where we're going to be very, very interesting in this S&P market if we can get it above the 2370 level, and also if we could get the gold above 1270 level. That would tell us we're probably going to go about $9 higher, but it's got to clear this area of the 78.6 at 1268 before it can do that, but we'll have to wait and see. Now, like I mentioned before, if you happen to be in that euro trade, make sure you have your stop. Keep it kind of close here. Don't let it go to a loss, of course. It's got about 35 points in it, and you don't want to have that go to a loss. The same thing if you're looking at that Canadian dollar. It's only moved about 15 pips in your favor, but believe me, the Canadian dollar does not have the same volatility that we have in the euro. I mean, for the Canadian dollar, to move 40 points, it's quite a bit. So that's something that you don't want to be measuring now. Now, the next thing that I wanted to talk a bit about is Amazon, because we were talking about the stock from a technical basis. Amazon is now hitting the exact 61% retracement from the high that it made at 1924 to down at the low we made here at 890. So this is going to be another important thing to look at today in Amazon. If you'll give me a second, I'm going to bring it to your attention so that you'll be able to see it in the room, and that's the whole premise of doing all of these things. And if you'll give me 1 second, I should be able to pull it up very, very quickly. Maybe not so much. Oh, I've got to have it here somewhere. I just added it to the thing. Here it is. We got it. Holy cow. There we go. Here we put this up for Amazon, and you'll see that we're right at the 1.618 retracement. We went through that 905 level yesterday, which was a 50% retracement, and now today we're at the 61% retracement, which is, I like that number. The only time I use 50% retracements, folks, is when you have a perfect A, B, C, D pattern ending at the 50% retracement. Other than that, I only use the expansion ratio or the contracting ratios of 618 and 786. The reason for that is Bryce Gilmore explained to me that 50%, even though it is a Fibonacci ratio, is basically a static ratio. It's neither expanding nor contracting, and most of these things are moving. They're expanding or contracting on a pretty good basis. Someone's asking the question about how comfortable I am about the support at 2346.75, which is so far our low of the day. Folks, that means absolutely nothing. It's early in the morning. We're only 7 minutes into amateur hour, so it could very easily get down to 2341 or something like that. So that was just the opening indication where the stops were yesterday, and professional traders put their orders there to buy, and they know that that's where the stops will be most of the time, and they're just banking on probabilities. So watch that very, very closely also. Now remember that the IWM has been has been weaker than all the other markets. We'll bring this up to let you take a look at it, but it's another one that is showing that we've been in a downtrend, for a certain amount. Folks, the problem in the markets is not in the stock market. The problem is in the bond market. That's where the real problems lie. And I think that if you'll keep that in mind, you'll be far better off than if you don't. That's pretty much the bottom line, because the bond market is where the real problem lies, and we're in a very bearish scenario as far as the bond pattern. I put that up the other day. I'll put it up again just so you can see it, the importance of this 153 level. And we're a point higher than where we were because we're bouncing back a little bit, but we're still basically in a pretty strong downtrend in this. And we're finally getting a little bit of movement in the VIX, and so we'll see what's happening here. 877-927-6648.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays. We broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and I posted the chart of Tesla. I have several requests about this because this stock is gapping all the time, folks, and the reason for it is the fact that you cannot get stock to sell short. They just don't allow you to borrow it. It's mainly in the hands of just a few people, and Musk has got most of it, I guess. So the only way you can really trade this from the short side, I believe, is if you first of all, you can't trade it overnight, would be my guess, but either do some type of an option strategy. But, we're way above, we're about $4 above the ABCD pattern that's here. So you'll see, you're right, it probably is a cult stock, much like Apple was at one time, but Apple's now, one of the biggest. There's another stock here that we've been asked to talk about this morning that has been in a bearish mode for a very long time, and now we're beginning to see more and more of it to the downside. If you'll notice here, this is Twitter, and you would think with the president using Twitter like he does, you would be looking at something that would tell you you got a tremendous buying opportunity, but that's not the case. Back in September, they were trying to sell the company at 25. They were looking for 30 or change, I guess. They got a little greedy. The deals fell through, and now we're 60% lower than that. No, wait, not 60, 40. Yeah, 40% lower than that. So right now we're setting at a 1.618 expansion of the move from December to February. So there will be some support here at the $14 level, but anything below $14 means you're most probably going to take out last year's low, which was $13.92. So this is not a stock for the faint of heart, but you do have an ABCD pattern there, and you do have the 1.618 expansion level. So you've got a good place, to stand and put up a defense. That's the main thing. Now you'll notice that the S&P broke through those old lows at 46, like we expected that something would happen, because that really doesn't mean anything. That's why they call it amateur hour, folks. And now we've expanded down to the 1.27 level in the stock market, and now we could be heading down towards that objective. The objective on this move is another 20-some points lower at 2317 in the E-mini S&P. So keep an eye on that. It might not work, but that's what's happening. 2317. That's it. That's where you've got that ABCD pattern, coming together, and it all should line up, the right way. So keep in mind, these markets don't always do what you want them to do, but most of the time, they will. I'll put this up here for you again so you can see it here, because there's going to be, you can see we got down to 2341 already. Just one second. We'll just put this up here in the E-mini S&P so we can look at it again. You'll see that the level is 2317 is the ABCD pattern. Oh, Larry, time out, boys and girls. I'm going to get these numbers right. 2327 is the ABCD. 2317 is the low we made in late March, back on the 29th of March. So all we're doing now is we're coming down, and that's a 1.27 expansion of the ABCD swing, and it's also a 78% retracement. Now, in order to get there, of course, we got to get through the 2338 level. That would give us this last move down to the next area. And believe me, if it goes below that, you could be looking at an even much greater, move to the downside. And that's it. Someone's asking me about politics. Folks, I don't know anything about this war stuff that they talk about all the time. I mentioned that 100-year cycle in the World War I only because it happened. It started on the same day that we used our rockets in Syria. But that's all I really do. I look at the daily cycle. Sometimes the astrology helps. Sometimes it doesn't. But you've got to be able to define, what your line in the sand is, if you want to use a political phrase, because that's where you have to decide whether you're going to be right or wrong. And that's really what you have to do. You can't be anything, you can't be too excited about it, that's for sure, because if you do, there's not much that you can do about it. Now, we're down about 10 points here in the S&P. We're very close to the 78% retracement there in the thing, but it looks like it could go, down to that 2327. That's not very far away now, folks. That's only 15 points, which isn't very much. If you'll remember, we talked a little bit about the NASDAQ yesterday, and the NASDAQ was doing pretty much the same thing. And if you'll let me get this put in here for you today, you'll see that we've broken below those lows in the NASDAQ now, I believe, and we should be heading down to 53.58 in the NASDAQ. That would equate to that same number that we're looking at in the E-mini S&P, 2327 in the E-mini S&P, and 53.55 in the NASDAQ. So we'll see what is going to, if that's going to happen. 53.55 is pretty important, folks. Could someone tell me where the NASDAQ is trading? Because I don't get live prices while I'm doing the show. I would like to get an idea. Oh, wow, it's already there? My goodness, that's equivalent to what the S&P should be doing. So the NASDAQ is extremely weak. So that, it's trading at 53.92. Thank you very much. Okay. That I didn't think that could be right. Okay. Anyway, we'll keep it. That must mean that 910 level in Amazon must have held. That was the 61% retracement. And of course, we did hit the 78% retracement in the gold at the 1268 level. So we know that that's what we'll have. See, Amazon has already dropped $7 from the 61% retracement from 910, down to 903. The VIX is what's really moving today, folks. So this could really be a big move in some of these markets. So pay particular attention, because we even could start to get a flight to quality in bonds. As you can see, they've now taken out, the 61% retracement, and they're going up to the area of 152.20. I'll be surprised if they can get above 153, but I get surprised a lot. And much of this is being caused by what's happening in the dollar-yen, folks. The dollar-yen is very close to breaking below the 110 level again. That's an incredibly bearish phenomenon. So keep that in mind, that it's going to be really interesting here to see how this unfolds here in some of these currencies, because we've got some real critical levels. The Canadian dollar is now moving nicely. It's up more than $300 from the bottom. So certainly put your stop at your break-even point in the Canadian dollar. You don't want to risk anything now. because it certainly had a nice little move early this morning, right off of that 3 drive to a bottom pattern. And as we've said many times, sometimes they work, sometimes they fail. So watch it very, very closely. Now, someone's just asked me, if I were to sell gold right here at this 1268 level, how much would I risk? Frankly, folks, I wouldn't risk more than $3. That would be my maximum risk on this. And the only reason for that is I respect the 12 or that 786 number so much. I'll get back more about that when we get back. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and someone's asked a question about how I determine, when I'm looking at stocks on a day trading basis, how do I determine, my stop level? Basically, what I do, folks, is I look what's happened over the last day's trading, just taking one day, and I try to find out what is the largest bar that occurred, let's say on a 15-minute chart or an hourly chart, whatever I'm looking at. I'll take that bar as my maximum risk, either on the long side or the short side. Today in gold, that bar happens to be $4. So, if we get up to this 7-8% level and the market goes $4 above it up to the 1272, I would say uncle and move out, and that's what I would be looking at. Now, We are seeing a little bit of a sell-off in copper today, which is not to be unexpected because it's been, quite bearish for quite a while. But now we're breaking below support. But the real support in the May copper comes in at 255. We get below 255, there's trouble in River City, as Robert Preston would say. So watch that level, 255 per pound in copper, and that would be something that would be very, very negative on the copper chart. So another thing to keep in mind as you look at some of these others. Now, folks, someone just asked about the Canadian dollar. Folks, if you're going to do these, when I throw out a number like this, whether it's gold or treasury bonds, and that you've got to be able to protect yourself. I'm just giving you some ideas. You got to do the work yourself. Like Twentyman says, defy human nature. Do the work yourself. By the way, I won't be able to be here on Thursday. I'm going to plan a little something for the old Easter weekend with the kids. So I will be taking Thursday off, and I'm giving everybody a holiday on Friday. That's my gift to you for the Easter basket. So when you open it up and you don't have to see anything, we'll see it. Live every day in an attitude of gratitude, and may God bless.
It's that time of the year again, and that means the Spring Tiger Dollar Sale is back. TFNN has just announced that our best Tiger Dollar Sale of the year is back this week only. Right now, you can get up to a 50% bonus on whatever you spend on Tiger Dollars. Tiger Dollars can be used for any TFNN newsletter or service and are a great way to add extra savings to any TFNN product. Tiger Dollars never expire and are fully transferable. Whether you're a current subscriber or plan on purchasing anything in the future, this is a great time to get your Tiger Dollars. Remember, this sale ends Sunday and we're closed on Friday with the market, so don't delay. The Spring Tiger Dollar Sale with the potential to earn a 50% bonus on your purchase only comes around once a year, so don't let it pass you by. For all the details and to get your Tiger Dollars today, visit the front page of TFNN.com.